And here is your closing bell.
And that ends today's trading session as the Dow shakes out its final trades. It looks like it's going to end just in the red, off just about 6 points. The Dow was off over 300 points at the lows of the day. S&P and NASDAQ also ending well off their lows, both off just around 1/3%. Taking a look at some of the underperformance here in terms of sectors, some of those defensive sectors outperforming, some of those sectors that are most prone or most at risk if we do see a recession underperforming today on the heels of some comments that we got from Fed officials earlier today. Well, here for a look at the broader markets, we want to bring in Deborah Cunningham, Chief Investment Officer of Global Liquidity Markets at Federated Hermes. And we also have Russell Evans, Chief Investment Officer at Avitas Wealth Management. Russell, let me start with you just in terms of the action that we saw today. What we heard from the Fed, I'm bringing it up right now, but Fed's James Bullard saying that rate hikes have had limited effects on inflation so far. We also had Kaskari saying that not seeing much evidence of underlying demand cooling. Do you agree with that?
Well, they were all smitten and everything was great up until a couple of days ago. And then we had a couple of Fed, seers telling what they thought, and they just kind of changed their tune.
And Deborah, what are you making of the market activity that we're seeing at the moment?
I do think, there was some amount of officials being enamored by the CPI and PPI prints that we had that were, somewhat favorable, surprised on the lower side. And so, I think the thought process that the Fed would like to see, or the plan they would like to see, is keeping with, sort of the increasing rate environment, but maybe doing it a little bit more slowly. So not, taking the 75 basis point hikes every single meeting. But I think they still have to see that proof in the marketplace. And certainly, the most impacted sectors of the economy, like the housing sector, are performing basically as they thought, with higher mortgage interest rates, lower pricing, a little bit less demand. But then you have things like wage inflation. You have things like supply chain still causing goods inflation. You have the energy market still, down relative to mid-year, but up from a pricing perspective year over year. So all of those things are playing into what still is a pretty strong economy at this point. And so far, from a retail sales standpoint, in the beginning of, the holiday sales season, everything is pointing in the direction that will be fairly strong as well.
Russell, what are the implications here in terms of Fed policy? How much further do you think the Fed has to go until we start to see a little bit more cooling?
Well, there was a lot of euphoria, and it lasted for 5, maybe almost 10 days. And then all of a sudden we've had 2 days of a reversal. I think it's just normal. I think, that kind of would be the answer to your question.
And Deborah, as you see the performance of some of these more defensive plays here, at what point would you be comfortable rotating further into some of these growth plays?
Well, we review on a daily basis what's happening and whether it's the correct time. The correct time, though, is really hard to predict. And so I think rather than making wholesale change, it's oftentimes just a matter of directional changing from an allocation perspective. And if that's something that can begin, say, before the end of the year and continue into the beginning part of next year, I think sort of layering in that type of approach is a good way to plan on going back into some of the riskier sectors. Doing it on an all-in basis, and let's say dumping what would be, the more traditional and basically the safer path at this point doesn't seem like it would be the appropriate way to go, especially with the Fed that's very much still in play.
So, Russell, where does this leave you just in terms of where you're seeing the most opportunity? Certainly a lot of uncertainty over the next couple of months. So what are you doing?
I think if you just take a pause and think about what we saw in the last 10 days, and we saw the last 2 of the 10 days wasn't such a great for growth. But honestly, if you just take a pause and think about where you can put your money right now, I think growth is where you want to be. I think you put some money into value, like, but the fact is that growth is just taking a little breather here, and it's really coming back strong.
Now, obviously, a lot of retail investors and people perhaps looking at their 401ks and starting to panic as they see some of these numbers come down. What sort of mindset, Deborah, should investors have at the moment, depending on their time horizon?
I think that's exactly what it's dependent on, their time horizon. Generally, when you're looking at investments such as 401ks, you're looking at something that's, a retirement type of process. And if you're in your, 30s, 40s, then I would say throw away the statements. Don't even bother opening or, clicking on the update to receive those statements. Having said that, if you are nearing in the next year or two that retirement phase, then obviously you need to think a little bit more carefully. You should have thought about it probably 5 years ago and changed your allocation. Maybe unless you're talking about something that's less than a time frame of a year, you're probably still talking about holding at this point in time with some sort of an expected recovery thought for 2023.
Certainly hope so. A big thank you to our market panel, Deborah Cunningham and Russell Evans. Thank you both so much.